Hey guys, so welcome to this quick video. This will be a strategy video. Alright, this will be a strategy video on how to trade break and retest better, and I want to analyze a trade that we took in VIP on Friday the third. Yeah, the third of June, 2022. Okay, I want this is for basically traders that are looking for a strategy. This is one of the easiest strategy that you ever see. This is one of the easiest strategy you ever see in the forex market, and you know, it's a variation of break and retest. It's a variation of break and retest. Ultimate break and retest blueprint. Okay, perfect. So it's a variation of break and retest, but you need to follow the rules. You need to follow the rules. I want the video to be maximum 6 minutes, but let's see. Let's see. So I will analyze one trade that I took that we took on what's it called on Friday, the 3rd of June, and that will be it. So basically, what you need is break and retest. You have a structure. You have a structure. You know, you have a structure. You know, you have your resistance. You have your support, right? So break means broken structure. This is retest. It comes back to retest it, and at this area, you know, you have your push, you have a continuation in that direction of the break. So that is basically um the layman's explanation for break and retest, right? Yeah, but 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 that if you check through your chart, you see that this doesn't happen all the time. That this does happen all the time where price would, let's say price is hitting a level, price is hitting a level, price is hitting a level, a resistance level, and it breaks out of that resistance level. Then you mark that zone, right? You mark that zone coming. What am I doing with this? Okay. You mark that zone, you say it's your resistance, right? Price breaks out of that resistance, and you have a broken structure, and then you wait for price to come back to that level to give you an entry for buys, right? If you go through your chart, if you go through your chart, you backtest it well, you will see that um this doesn't happen every time. This doesn't happen every time, right? This doesn't happen every time. So there are ways to filter losses. This is what this video is all about. Ways to filter losses, ways to tell you the trades to take, the trade and the trade not to take. So if you could spare me the next 3 to 5 minutes, I will show you that. So there are rules that I follow. Obviously. There are rules that I follow. And I would like to show you those rules, right? Now the first thing I need to see, is broken down market. So this is the first thing I need to see. I need to see a broken down market. And the next thing I need to see is this. Very broken down market, three pushes, three pushes, or three busts, three pushes, slash busts in form of retracement, right? Then the third thing I need to see, the third thing I need to see is at the third push, at the end of the third push, the end of the third push, I want to see M slash W pattern. I'll explain that myself. And the last one is, once you see the M pattern, you enter and place stops, place stop loss above M formation, and entry is after candle close. So this is like the blueprint I follow. This is like the blueprint I follow, right? So this is like the blueprint I follow, alright? And ultimate break and retest blueprint. I want to see broken down market, something like this. You have price pushing, and then you have that break. It's taking out all these lows. It's cleared this low too. It's broken down. It's a broken down market. It's a broken down market, and you want the market to return to this area. You want the market to return to this area. Where is it? Sorry. To this area of what? Former support, which turned resistance, which is now resistance. So you want the price to return there, right? In three pushes. Now, what do I mean by the three pushes? I know you guys already interested in that. Now, three pushes means, let's take for example now this one push, right? Come, two push, right? And then a three push. So at the third push, it says I want to see M or W pattern. Now, this M or W pattern, so I want to see it like this, this middle part gets broken, right? This middle part gets broken. This is my entry here. This is my entry here. So there's something else I omitted, which is wrong. Now the candlestick I need to see, that should be number 4, and this should be number 5, right? So the candlestick formation I need to see here need to be two things. It need to be two things: pin hammer, or engulfing, right? Pin hammer or engulfing. So those are the two candlestick formation that you need to see. What's a pin hammer? Now, there are different variations of pin hammers. There are different variations of pin hammer. You have the bullish and the bearish. Now, in this kind of situation right now, what you are trying to do, you're trying to sell, right? When price is at resistance, you will need to see a bearish pin hammer. Bearish pin hammer on the higher time frame. Now, what does that mean? Let's say I'm analyzing this market on the 15-minute time frame. I need to see on the third push, I need to see bearish pin hammer or an engulfing candlestick. Now, this is a bearish pin hammer, right? You have your wick, top. The wick is almost times 3 of the whole body. So you need to see this kind of formation at this area, right? So this is the area we're looking at. We have gotten a broken down market. We have gotten a 3 pushes: 1 push, 3, 2 push, third push, right? We've got to the 3 pushes. Now we've gotten our pin hammer on the, let's say, the 15 minutes or the 5 minutes. Now we have to go to the 1 minute. We'll go down to the 1 minute. Right, to look for the M formation. Now I prefer the M formation on the lower time frame, and the pin hammer or the engulfing on the higher time frame. Say this structure is forming on the 15-minute time frame on gold. I would like to see the M formation on the 5 minutes. If the structure is on the 5 minutes, I would like to see the M formation on the 1 minute. If the structure is on the 30 minutes, I would like to see the M formation on the 15 minutes, right? And on the higher time frame, I want to see the pin hammer or the engulfing. Now let's say this is, let me change the color to red since it's bearish, right? Bearish. Come here. Mhm. Change to red. It's not red. Anyways, so this is a bearish pin hammer, right? This is what you need to see. This is what you need to see at this level. Right? This is what you need to see on this level. Now the second thing you need to see is the engulfing candlestick. The engulfing candlestick is something like this. You have your smaller candlestick here. Let's say this is a bullish candle. This is a bullish candle. Then you have your bearish candlestick engulfing. totally engulfing it, right? To show that yes, it's time to go down. Now this works every time. Believe me, this works every time. Yeah. So this is your engulfing, and this is your pin hammer. These are the two variations I need to see. When I want to sell, these are the two variations I need to see. These are the two variations I need to see, right? That is how it is. Now, for let's say, let me take a bullish scenario. Let me take a bullish scenario, right? You see the same thing. You see the same thing. You have structure. Sorry, you have structure. Hitting this level. Hitting this level. You've marked up your. There's a support. This is your resistance. Price breaks through the resistance. Price breaks through the resistance, right? Comes back to retest. But what do you need to see? You need to see three pushes. One push, two push, three push, and then on the lower time frame you need to see your W formation, not the W formation. The middle part is got broken, and on the higher time frame, what do you need to see? You need to see what? You need to see your engulfing. That is bullish engulfing. This is bullish engulfing. Say there's a bearish candle or a smaller candle. Then beside it there's one that totally engulfs it. Totally engulfs it. This is also an example of engulfing candlestick. You need to see this kind of formation on the higher time frame, right? Or you need to see the bullish pin hammer. The bullish pin hammer, right? Sorry, widen this a little bit. Yeah. So almost times 3 of the body. The wick is almost times 3 of the body. This is the bullish pin hammer. This is the engulfing. So you need to see one of these at this area. At this area, on the higher time frame, and on the lower time frame, you need to see the W formation. This is for the buy scenario. That is just how it is. Now, for the when you put your stop loss, the stop loss will just be this for the long position. Stop loss will be just below the M formation, the W formation, and your target to minimum the last resistance. Minimum the last resistance. Minimum the last resistance. Same thing applies goes for the sell scenario. Your stop loss would be here, your entry will be here, minimum targets will be here, and stop loss will just be above the M formation, and that is it. So you get lots of 1:4, 1:3, 1:5 trades, 5 hour, 6 hour, 4 hour. The any pair works, any pair works, any pair works, or any pair works. I'm not going to drink water. Any pair works, alright. Now let's go to the chart. Let me analyze that trade that we took. I was on 5 minutes, I think. I was on 5 minutes Friday trade. Yeah, perfect. Yeah, this is it. Now, okay, check the time here. It's 5:15. Okay. So New York session was opened around here. Yeah, this is where the New York session opened. So New York session opened down here, right? We had this is a support level that the price was bouncing off. Then what did we have here? Let me zoom in. Let me zoom in to the 5 minutes. Let me zoom in a little bit into this. So when you look at this, the market was manipulating these lows. It came here, you know, came back again, you know, then finally came back here with this candle. And then what did we have? We had a broken down market. You can see this push. You can see this push of around 60 pips. Yeah, or 70 pips rather. So we had the first rule. The first rule was confirmed. Broken down market, right? Broken down market. Now, right? Most traders would be selling this. Most traders will be selling this. Most traders will be selling this. Look at this. Most traders will be selling this. This is an engulfing, a serious engulfing candle formation. So, right? You can see this is smaller bullish candle engulfed by a bearish candlestick, right? At at an area of what? At an area of former support which turned new resistance, right? Now this market went back up and took out their stop losses, right? Why did they do that? Because they didn't know the rule of the three pushes. They don't know the rules of the three pushes. Now let's count the three pushes together. You can see this. One push, right? Two pushes, right? Let me change the color of these things. No, red is not. Let's use yellow. Oh, no. Let's use black. Yeah, let's use black. So first push, second push, third push. Same thing as I showed you guys. And then on the 1 minute, let's go to the 1 minute. You will see the M formation. You will see the M formation. You will see the M formation. Now this is the M formation. Look at the M formation. Sorry. And this is an M formation, right here. So that is your M formation. My entry was here. Back to this week's. Let me use the trend line. Back to this week's. That was my entry, and my stop loss was just above. Let me check the entry again. Okay, this is the entry. Stop loss 1863.7. Now normally I told you guys to put your stop losses here. Your entry should be here. if you're a beginner and you're testing out this strategy, your stop loss should be here and your target should be here. Sorry, there's a mistake. Your entry should be there and your minimum target should be here, right? But I've gotten used to the strategy and I know where if price gets to 1863.7.8 or so, yeah, that it can't come back again. Why did I do that? Because there's something called this will be for another video, something called three bar pattern. 3 bar pattern. 1 2 3, 1 2 3, but it's in the next video. But for now, just know that your stop loss will be here and your minimum target for this kind of scenario will be here. Risk to reward ratio of over 1:2 or 2R is very good. 1 push, 2 push, 3 push, and you're done. That's how the market moves. 1 push, 3 push, 1 push, 2 push, 3 push. I know a lot of traders who sold the market here. Who sold the market here. Sold the market here, and they lost their trade. They lost the trade because markets will always respect the 3 pushes: 1 push, 2 push, 3 push. All right. So this video is already 27 minutes long. I hope you got something from this video, because the rules. Just know the rules, the templates. You can take a snapshot, you can take a screenshot. Master the rules. Master the rules. That is the most important thing. The blueprint. That's the most important thing, right? Where is this thing? So that's the most important thing you need to know. Broken down markets, 3 pushes back in form of retracement, and then the third push I want to see formation on the lower time frame, right? And and I want to see candlestick formations like engulfing or pin hammer. Now I forgot to check that. Right. Forgot to check that. So let's check that. Okay. Now you can see the engulfing pattern here. So let me clear this. Now you can see the engulfing pattern here. This is an engulfing, just as I showed you guys. This is the engulfing. So when I saw the engulfing and I saw the formation and I saw the 3 pushes, I knew that there was only one way this market was going to go, and you can see how far it dropped. We actually took 100 pips. We took 100 pips from this market. I sold from 1862. Stop was 1863 yeah, and I got out 1852, 1851 ish. So that was easy. That was very easy to do. Now this is your minimum target. There's your minimum target there, and you can actually extend that. Look at that. So for now, just stick to the what's it called? Stick to the normal rules. Stop loss above this M structure. Um, minimum targets should be at the what's it called? At the previous support or the previous resistance. This is the previous. This is the previous support. So this is where you should put your target. Simple. Your stop loss should be above the M structure. You enter after the break. After the candlestick has been confirmed that it is engulfing or pin hammer. Easy, easy. So this video is too long. Let me just end it here. And check the description below for the link to our free channel. This is the juice traders, right? This is the juice traders. Yeah, the juice traders. You can join our free channel. And yeah, please don't forget to like this video. Please don't forget to like this video. Thank you.